Katherine Hayes from Hayes & Co. Welcome to Property Insights.
Lovely to be here, Mark.
So, right, we've got Hayes & Co., which is the financial advisors, financial advisory business. We got your Money Madams, your podcast, which we're going to talk about. I want to know what that's all about. And you've got a book out there, Make Money Your Bitch. I quite like that one.
I know, I'm a fan of the title.
Yeah, so it's pretty good. So let's talk about Hayes & Co. first. So what do you guys do? What's your specialty?
So personal protection, that is all I live in.
Which means what?
Which means life insurance, income protection, really protecting the person so that when things go wrong, money is the last of that person's worries.
Right. Why is it, or has it been important in the past, in particular, to make sure you've got trauma, disability, death, etc., insurances, particularly if you've got a mortgage, and is there any change in that sort of profile? You know, as we get into tougher periods, is there any change in the profile? Is insurance becoming too expensive, or is it making much more sense now? I mean, just talk about the past. Why has it always been an important thing?
In a nutshell, mortgages, the biggest reason a bank will foreclose on a home is financial difficulty, which is more often than not brought about by a health reason. That is exactly the role of income protection insurance.
That's interesting. So that's very interesting you say, Katherine. So are you saying, in a data sense anyway, or an evidentiary sense, that most times that we have a problem, I mean, apart from divorce, but most times we have a problem with paying our mortgage is a health issue?
Correct.
People get sick and they can't work.
Income interruption, and then people get stressed and it's just a downward spiral. It's completely preventable.
Yeah, so some people would say, yeah, but I got insurance through my super. Yeah.
That drives me nuts.
Yeah, so tell me about that.
So a big part of that is for income protection. If you have it through super, not only do you have to meet the claim criteria, you actually have to meet condition of release rules, which is even tougher. And often the claim payments are cut off after 2 years. That's it. If you can't work for the rest of your life and you're in your 30s and 40s, that's not really going to help you out.
So just explain to me, because I find it a difficult concept. So how does disability insurance work? So what actually happens? So like, you know, I don't know, I do something, I break my back or something like that. And I'm going to be incapacitated for maybe the rest of my life. And I've got a mortgage. So, and I can't really work because I was a plumber, for example. So what does this type of insurance do for me? What do I get?
Well, there's 4 key ones.
Yep.
Life is a straightforward one. You pass away or you've got less than 12 months to live, really black and white. It's going to give you a lump sum. Ultimately, you want to take care of anyone who is depending on you and get rid of your debts, in a nutshell. TPD, total permanent disablement. That's the one that you just described, where you are never working again. That's what people usually have in their superannuation with life cover, and it will give you a lump sum. Once again, people usually want to get rid of debts and make adjustments for what that new life is going to look like. Income protection is different in that it's not a lump sum. It gives you that ongoing cash flow each month to meet your living expenses. And it's not going to give you 100% of your income. It's going to give you anywhere around about 2/3 of your income. So that's why it's really important to partner it with other insurances like TPD, because most people can't save 1/3 of their income. So if you can get rid of debts, for example, with a TPD payout, then that living on 1/3 less income suddenly becomes a life you can live with dignity and have some choices. It's really important.
So disability insurance pays you a percentage for the rest of your life of what your income was.
Yeah, as long as you're unable to work. And when we say unable to work, that's really coming down to the medical advice of your GP.
If I just take out a mortgage, let's say we're young, doesn't really matter how old we are, but let's say me and my partner or just me on my own, and what's the best thing I should be doing? What's the first thing I should do?
Well, number one is securing your income. When you're young, if you were to look at whatever wage you're earning, multiply it out to the number of years you have to retirement. Now that's assuming you're never going to have a pay rise, you're never going to have an inflation increase, which you will. But if you multiply that out, that's what your earning potential is.
Yep.
For most people, that asset is bigger than any mortgage, any superannuation, any other asset they'll have. That's what you're protecting.
That's a good point. So you're protecting your ability to derive money from your personal exertion.
And if that's gone, you can't do a lot of other things if you lose your income.
So I guess the best way to do these things is when we see these ads on television, you know, you can get this insurance, that insurance. But what should I do? Should I go and see a financial planner? How should I go about this?
Get advice. And there's a lot
Who
of ways
from
you
that?
can do that. I mean, ideally, I'm biased. I would say a risk advisor because that's what we specialise in. I'm going to give you a really great example with a super fund. Australian Super, one of the biggest super funds.
Yep.
I recently ran a quote for $500,000 life TPD and income protection. Their quotes were 3 times higher than
premiums.
Their premiums 3 times higher than what I could get that exact same person for that exact same cover using the exact same insurer they do.
Why is that? I don't understand.
Well, there's a couple of issues around it. They may not rate for smokers, so they assume that risk is spread across the pool. Sometimes when you give away cover for free and there's no medical underwriting, once again, everyone in that pool kind of gets that dirty water and has to have increase.
So they take the lowest common denominator, and that builds a premium which everyone has applied to everybody.
Oh, and look, it does serve a place. It has its value, but if you want to get a better deal, then an advisor is the best person to be able to do that.
So okay, I get that. So like, should I expect my, let's call it a broker, mortgage broker, insurance broker, or my advisor, my financial planner, should I ask them to go get me a number of quotes, and should I every year get it reviewed? I mean, is that necessary?
No, not really. If someone's had a really big change in their situation and it's 6 weeks later, then they should come in for a review. But particularly if you're young, if there hasn't been a significant amount of changes in your life, I would say it's something that you would want to review every 4 to 5 years.
Right. Okay. But you should review it at certain periods.
With certain triggers in play.
Okay. Now tell me about this podcast.
Okay, Money Madams.
Money Madams. Who is that? I mean, are you the madam?
So myself and my friend Amber, we really got together because we were having conversations around money. She was actually a client of mine and met through a mum's group, and she would say, Katherine, you are the only person I can talk about money. Everywhere else it's taboo. And she loved our conversations, and one of her friends came along and said, you guys should have a podcast. And we were already working on a book. And that was just an excuse to get together and have a few drinks and away from the children and talk money more.
And where do I get this? Where can I see this, Money Madams?
The Money Madams?
Yeah.
So the podcast can be
on
found
Spotify,
everywhere.
iTunes,
It's pretty much on any platform it's there.
Yeah, right. And how many episodes have you done?
I think we recently cracked 100. We've been going for about 3 years now.
And what sort of things obviously during COVID it was a good thing to do.
Yeah.
But what sort of things are you covering off in your episodes?
Oh, everything from, it's financial literacy with a lifestyle element too. So we talk about things like, strategies for paying off your mortgage faster. We talk about, protection. We talk about investing. We talk about the impact of buying a car brand new and the price points. And we've even had lifestyle episodes where we've had divorce lawyers come through and help people understand the process and how to protect themselves and prepare.
And is your audience largely women?
It's about 2/3 women. I didn't expect to have as many male listeners, and oftentimes they reach out and go, hey, can you help me with my insurance? And I asked them, I said, why are you listening to a show called Money Madams and you're a bloke? And he goes, but you've got good info. So,
Hey. Yeah, so it's the two of you. You run this.
You
just run this, and you bring guests in, I guess, from time to time.
Absolutely.
And tell me about the book.
Okay.
Make money your bitch.
So the whole theme of the title is so often people they feel controlled and limited by their money. So the whole concept of making something your bitch is that it doesn't control you. You are the master of your domain, and then money serves you rather than the other way around.
Yeah, make your money work harder than you do. It's funny, make money your bitch. I remember when I owned the Wizard business back in 2002, we ran a television advertising campaign where we referred to the mortgage as a beast. And we designed this little beast outfit, and we actually got a small person, a small adult, very, very small adult, into this outfit. And this outfit externally looked like a turd. And and it was called the idea was to conquer the mortgage beast. Similar to what you're saying, don't let it dominate you. Don't let money dominate you. Don't let mortgages dominate you. In our case, we're a money lender. And we ran the advertising program on television, but the way the ad went was that there was a family sitting at a dinner table having dinner at night, and they played some creepy music, and this mortgage beast waddled into the dining room of this family and walked over in the corner and did something quite crude. In these days would be considered crude. Had a pee in the corner, and you could see it was having a pee. And then the dad walked over to the mortgage beast, and everybody watching this would now know it's a mortgage beast because we sort of have a thing under. And he got the mortgage beast up and put it on his lap and spanked the beast. And we, of course, then got caught up before the Advertising Council for inappropriate whatever, and we had to withdraw the ad because it was shouldn't be shown on prime time. But my point was, like your point about your book, make money your bitch. Make the mortgage. Don't let the mortgage beat dominate you in your life, and that comes around by having a better understanding of what it is you're doing, being better educated, and therefore you become far more empowered, which is an overused word, but far more empowered relative to the thing you fear. And fear is about not understanding something or not having experienced it. So is the book doing well?
Yeah, well, we're entirely self-published.
Yeah.
So for us, we had one of the best parts we had was Kate Carnell. She was the
I know Kate.
The small business ombudsman. She actually came out and did our book launch for us. So we reached out, and that was one of the highlights. That she came out and she read the book and she just said, "This is great. You're just doing what's needed."
Yeah.
And so she was really lovely and encouraging. So
what are the chapters on it? So what are we looking at? Like what are the sort of things you touch on?
There's really 11 steps that we've got based in the book. And the first one is really about knowing your numbers. I mean, most people hate budgeting.
Yeah.
They suck at it, but they suck at it for a reason. They just don't know how to do it well. They do all the hard work of working out the numbers, but they never learn how to automate their budget so it becomes a living, breathing tool that can run smoothly in the background.
So what's some like your background? Like how do you know this sort of stuff, and whereas most people don't want to do it but don't know it anyway?
In a nutshell, I was a full service financial planner.
Yep.
And I got into that industry because I really wanted to help people understand money. My parents were terrible with money, made all sorts of mistakes, and I grew up thinking, I don't want that to be me. So as a teenager, I started reading, Rich Dad, Poor Dad, Robert Kiyosaki, and it just went from there. And any opportunity I had to expand my knowledge in financial literacy, I did.
And it's mostly our industry, well, your industry. I'm not in your industry, I'm in the mortgage industry, but your industry is sort of pretty blokey.
Yes.
How does it feel for you to be doing so well and having so many things on the go at once as a female? I mean,
Feels awesome.
Yeah, no, but are you enjoying representing,
Yes.
more females in this industry? There needs to be many more females in this
Absolutely.
industry, from my point of view.
As it stands right now, there are more women studying financial planning than men.
Right.
So we'll see that change come.
Is that right?
Yeah.
Oh, that's a good thing.
Yeah, it's a great lifestyle for women. I mean, there is a lot of work, but in terms of flexibility, it is nurturing of relationships. It's gone from very transactional in some sections to being very whole of life nurturing, and women do that very well.
Yeah, that's very interesting. I think that's right. And COVID might have sort of catapulted that a little bit too, because you can work from home as your base.
I do 100% now.
Yeah, you can. So you don't have to have work in an office. Whereas probably prior to COVID, like if you're just starting out, you would have had to go to a financial planner's office, which might have been in Parramatta or in the city in Sydney. You had to travel, you had to stay there. And if you're a carer, if you're a primary carer, something might happen and you've got to pick some kids sick at 12 o'clock and you've got to go and pick them up from school. Whereas now, COVID allows you more flex. And you can do these things and still do your job, because you don't necessarily have to physically see your client, do you?
No.
There's no rules around that. You can do it. You can do it by Zoom or whatever.
Correct. I mean, pre-COVID, I was probably about a third Zoom because people were looking for me who weren't local. And then once COVID hit, everybody's acceptance of using virtual meetings, it just went through the roof. And I would say predominantly most of the clients I see now, they're at least 300, 500, 1,000 kilometres away.
Right, like interstate, etc.
Yeah, interstate. It does not bother them to only deal with me electronically.
Yeah, that's very interesting. So, and and your clients, what sort of range in terms of ages? I mean, where are we seeing this? Where do you think the biggest demand is for advice from someone like you now?
Well, I do believe you do tend to attract your demographic.
Yeah.
So I tend to attract those who are in their mid-20s through to mid-40s.
Yeah.
They've either listened to the podcast and they've just said, I like what you say and how you do it. So they come and find me that way. But a lot of financial advisors who are finding personal insurance too complex. So they send me their clients because it's now too hard for them and they just want someone who will specialise in that area. So it's a really good time to be working in the space that I am, despite all the regulation changes and the rest.
Yeah, well, you've got to have, to operate in your space, financial planning and financial advice, because of the regulatory environment, you've got to operate very lean. You know, you can't have too many overheads.
But you have to be efficient, and you have to adopt technology that makes you more efficient, and you have to constantly re-question the way you do things and why you were doing that.
And do you have family? Do you care for a family of your own?
Yes, I have 3 boys.
So you've got 3 kids. You're running this business yourself as a full-time job. Do you have any staff?
I have 3 staff,
Yep.
but they're all offshore. And they are the most hardworking staff I've ever had.
They're offshore.
Offshore. So everyone in my team works remotely.
They're like power planners or something like that?
Customer
Or
service
admins?
stuff. Yeah, admin. They have a high-level technical role as well.
Yeah.
But they work with my clients directly as well. So the only thing they can't do is give advice.
Right, but they load them up on the system. I mean, and how much do you rely on your digital system to be able to manage your client base?
So quite heavily. So we've designed it and we've got backups for our systems. But yeah, everything I do is all the processes are documented, but that knowledge still does lie with my staff and that understanding of those finer points and why we do things.
And can I ask you one final question, please, Katherine? Currently, it's potentially a distressing period coming up with mortgage rates going up and continuing to go up. Inflation's quite high. Insurance premiums, one of those things, is going up like everything else. Don't know about personal risk, but certainly in relation to property risk and asset classes, insurance has gone up, especially if you're up in the Northern Rivers or somewhere like that area. Is there a greater demand for your type of advice now than in, say, during the COVID period? Are you finding that?
Look, one thing I'm not short of is clients wanting to work. So there's always a season and a time that generates it. I actually thought when we had 2008 global financial crisis, people worried about redundancies. I think when people feel risk, they feel nervousness, they're more likely to run to seeking protection. So it doesn't matter what the cause is. You would think the opposite, that they might want to safeguard every cent that they have.
Yeah.
But when they're feeling the risk, they feel the reality of it, it thinks about, okay, what other risks can I control? So people tend to want to seek help more.
Katherine, if you go back to when you were 20 years of age, how would you today talk to yourself at 20 years of age?
Yeah, that's a really good question, because the means that were available that I use today didn't really exist back then. So one of the biggest things I'd have to do is really about having a good community. And I think that's a golden rule with any part of life. You need to surround yourself with people who are looking to do well, that they just don't accept the day in and day out as all there ever will be. And I think that will really help you get onto the right people. And if you want to learn more about personal finance, find somebody who knows that, or pick up a good book. So
or a podcast.
That's what I would have done back. Podcasts weren't a thing back then, and that's what I did as a younger self. I picked up a finance book, and because that was the best method, and then I went out and sought people who worked in that space to teach me what they knew. So yeah, you've got to learn from people and learn from the resources available to you. And today, if you weren't to reach out to an individual, you have podcasts, you have books, you've got things like the Money Smart website, there's blogs and forums there, and there's so much tools to feed those hungry minds.
And are people becoming more literate around managing risk compared? Because I mean, it's a tough word. Protection's even a tougher word, I think. People don't quite understand that perception of will the risk or the event occur, we tend to, Australians at least, tend to think, oh, no, I'll be fine. Should be right, mate.
I think that's fading a little bit.
Do you? Yeah. So this stuff is starting to change.
It is. I would say, particularly those sort of mid-30s and under, probably the most information-hungry generation I've ever seen. And they love learning. They want knowledge. And if you can give them that knowledge, you could share everything that you know with them, but they'll still want to work with you. They just want you to apply that knowledge.
And are they sort of savvy when it comes to things like, premiums, or do they get a shock? Do they sort of say, oh, wow, I didn't expect that?
I mean, everything. If you're doing your job well, it's all about managing expectations. So you've got to be really upfront and transparent. I mean, and the Royal Commission was a perfect example of people going, wait, I think I need to ask more questions. So you have to be ready for that.
Well, that's well done. It was a grudge purchase insurance. It has been in the past by people in the older demographic. But what's interesting is that younger people, you're right, they're much more savvy. They ask more questions. They do much more research. They're much more aware. And they don't have as many, they don't look at something like a grudge purchase. They look at like it's part of the transactional process of, say, owning a property. Well, part of owning a property is I'm going to get a mortgage, and part of having a mortgage means I've got to protect my income or the loss of my income. And there's a sequence of events. It's sort of sequential, and they're much more savvy around sequential things. So that makes sense to me. And thanks very much. I really appreciate you coming in. Thanks very much, Katherine Hayes from Hayes & Co. Thanks very much.
Thank you very much.